The Dow falling 444 points at its nadir Thursday afternoon, just paring its losses just only a tad. Oil prices plummeting, Treasury yields dropping sharply. Good time to get a sense of the mood on the trading floor of the New York Stock Exchange. We're joined by a guy you've probably seen a lot of photographs of the floor before. We're joined by Peter Tuchman. He is with Quattro M Securities, the floor broker there. Welcome, Peter.
Thank you, sir.
Well, Peter, as the most photographed guy on the floor of the New York Stock Exchange, give us a sense of the big picture that you're seeing today.
So, we've had a sort of a curious couple of weeks here. We did have a big sell-off about a week and a half ago now, I think, over the China story and tariff wars and trade wars and tariffs and whatnot, and sort of a bit of the incoherent policies coming out of the administration at the moment. And then we had a bit of a bounce back because there seems to be, I think a lot of people still see value in the market up at these levels. So after a couple of nice green days, we closed yesterday in the high 25,000s in the Dow, quite above the 200 moving day average. The S&P had approached back after bottoming out at 2801 a week and a half ago, got back up almost to 2,900. So at that level, with a market with a lot of potential anxiety over China, over what's happening in Washington, over, earnings have been okay, so that's not really a headwind. But at that point, when a market's sort of flatlining off the top end, you need a reason to buy them up at this sort of inflated level. And if you can't find a reason to buy them, you may end up selling them. And that's kind of where we came in today. They're waiting for a headline to really decide whether this is a point to leap off into higher ground or to sell the market and really sort of protect whatever profits you have in it. And I think that's what we're seeing today. Obviously, some news came out of China. One of the commerce higher-ups came out and said that if we don't put down our swords here, that we may end up having a problem ongoing for a number of years. That plus whatever anxiety has been caused by the fact that this policy is not really etched in stone, or a deal, or whatever controversy we've had over the last week between the president and China. Basically people are looking at whatever profits they have in this market over the last month, and they decided to sell them rather than buy them.
Well, Peter, right now we've got the S&P 500 down for the fourth time in 5 sessions. The Dow is now undercut its 200-day moving average. The
Correct.
NASDAQ is undercut its low of May 13th, wiping out its gains for April. You get any sense that we're headed much lower?
You know what, it's hard to know. I think this market is kind of in a curious state in this time, in this world at the moment, where, 100 and 200 point moves, while the press tends to look at them in an exaggerated fashion, they're not that significant for me. That's a flatline trade. Down 400 is worth paying attention to, but one day does not make a market. So we've seen this happen before. A week and a half ago, we were down almost 1,000 points in a two-day period over the China story, and then we were able to bounce back, trading off good levels yesterday. So this could be just today's trade. This could be, representing some of the anxiety in the market by people running money. The S&P down 45 handles is worth noting. There's no question about it. I'm not going to poo-poo this in any way, but I think we need to see how it follows through into Friday. We do have a weekend coming up, a long weekend. So, people could be posturing themselves to see what happens over the next 6 days, and you're maybe better off taking some profits, protecting whatever positions you have, and I think that's what we're seeing in the market. Let's see how the market, go ahead.
And Peter, you're right to put it into context. The Dow, percentage base, is only down 1.5%. But do you sense any fear among investors or floor traders that this trade war may evolve into something bigger, perhaps a tech cold war, or maybe even possibly a global growth in a recession?
You know what? We've seen that kind of narrative come into the market. It gets engaged by the market for a couple of days here and there, but it doesn't seem like there's a follow-through, right? A lot of people, way smarter than me, will think there's still value in this market, even with the headwinds we're seeing with trade and potentially slowing global growth. So all that being said, tomorrow we may come out. We are no further away from an up market than a tweet or a headline, right? We've seen that, right? We've seen days that are down 800 points. A tweet will come out midday or on the close or after we're already asleep that completely dislocate all that negative narrative, and we see the market rebound in a big way. So let's look at today. I wouldn't call it fear, I would call it some anxiety. Let's be clear where we're at in the week, in the month, in the year, and where we are in the marketplace, in the S&P and the Dow. You know, yes, it is a negative day. Yes, there's some anxiety. I wouldn't blow it out of proportion. Let's see how the follow-through comes in tomorrow and into the weekend, and we'll see what happens going forward.
Okay, says he termed it anxiety, but not fear.
Correct.
All right, thanks a lot, Peter, for joining us with your thoughts and reflections.
My pleasure. Have a great weekend.
You too. Our thanks to Peter Tuchman of Quattro M Securities, coming to us from the floor of the New York Stock Exchange. I'm Fred Katayama, and this is Reuters.